Hello intelligent investors, this is Victor here. If you have been following PayPal stock, you will know that PayPal stock has dropped as much as 12% in one day after it released its Q3 earnings. The main reason is that PayPal has lowered its full-year revenue and earnings guidance. PayPal's payment transactions from eBay have dropped 45% compared with the previous Q3 quarter in 2020. Many investors are concerned that PayPal's revenue growth will slow down a lot going forward because PayPal is getting fewer payment transactions from eBay. I will talk more about this major risk later on. Also, you can see PayPal stock has dropped as much as 34.5% from its recent peak here. In this stock analysis video, I am going to analyze PayPal stock to see if it's undervalued now. I will cover these topics. First, what is PayPal's business model? You will learn about how PayPal makes money and its biggest competitive advantage. Second, is PayPal's revenue growth slowing? I will talk about eBay's impact on PayPal's revenue growth going forward. Third, PayPal's biggest long-term growth catalyst and Amazon partnership. Fourth, PayPal's two biggest risks you must know. Fifth, PayPal stock valuation. You will learn about how to calculate PayPal's intrinsic value so you know whether PayPal stock is undervalued, fairly valued, or overvalued. And sixth, will I buy PayPal stock? If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and investing videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a premium member. Our goal is to create the best intelligent investor community that will help all our members grow their stock portfolios to over 7 figures over time. With your support, we'll be able to stay independent, hire other outstanding analysts to cover different stocks, and create many excellent stock analysis and investing videos every week that will help you become a great investor. The link is in the video description. Take a look, let's start. If you use PayPal, you will know that PayPal is the most popular digital wallet and payment processing platform to send and receive money online, either through the PayPal app or PayPal website. PayPal is essentially a fintech company. PayPal's most important products and services include PayPal app and its website, PayPal's buy now pay later service, PayPal Credit, Braintree, Venmo, Zoom, and its payment processing services for sellers. On the consumer side, you can send money, request money, transfer money between your bank accounts and your PayPal account, and buy things online using PayPal. Now, you can buy, sell, and hold cryptocurrencies, including Bitcoin, Bitcoin Cash, Ethereum, and Litecoin. You can buy things with cryptocurrencies using PayPal as long as the merchant accepts PayPal checkout. On the merchant side, PayPal helps businesses and sellers process transactions, accept payments from customers online and offline, make payments to other vendors, and move money between their payment accounts and their bank accounts. PayPal has two main revenue sources, transaction revenues and value-added services revenues. PayPal earns around 90% of its total revenues from transaction fees, and the other 10% of revenues come from fees generated from other value-added services. If you're the consumer, it's free when you use PayPal to buy things online, unless there's a currency conversion. It's free when you use PayPal to send money to your family and friends using your PayPal balance or your bank account if it's in the same country. PayPal earns revenues when you need to convert currencies or when you need to transfer money to other countries. PayPal earns transaction revenues primarily from charging merchants fees when they receive payments from customers. For example, in a typical sales transaction in the US, PayPal will charge the merchant 3.49% plus 49 cents of a fixed fee for each transaction if the customer uses PayPal checkout. PayPal changes these merchant fees from time to time. In terms of financials, PayPal has a very healthy balance sheet. For example, in the recent Q3 quarter, PayPal had 20 billion of cash equivalents and investments on its balance sheet. In comparison, PayPal had long-term debt of 7.9 billion and short-term debt of 1 billion as of September 30th, 2021. This means PayPal can pay off all its debts using its cash. In the same Q3 quarter, PayPal had an operating margin of 17%. In my opinion, this is still a good operating margin, but to be fair, you can see PayPal's operating margin had decreased in recent quarters. If you look at Morningstar here, you can see PayPal had very consistent revenue growth, operating income growth, operating cash flow growth, and free cash flow growth in the past 2 years. As of now, PayPal has over 460 million active users. PayPal's total active users had been growing very consistently for the past 11 years. PayPal's total payment volume had also been growing consistently for the past 7+ years. I will talk about PayPal's biggest competitive advantage later on. Obviously, past performance does not guarantee future business performance, so let's talk about PayPal's future prospects, growth catalysts, and biggest risk before we talk about PayPal's stock valuation. The most important question you may ask is PayPal's revenue growth slowing down because eBay is using its own managed payment solution instead of using PayPal? This is from the most recent Q3 financial report. Transaction revenues grew more slowly than total payment volume, TPV, and number of payment transactions for the 3 and 9 months ended September 30th, 2021, compared to the same periods in the prior year due to primarily to a decline in eBay's marketplace platform TPV with higher rates, a higher proportion of TPV generated by platform partners, large merchants, and other marketplaces who generally pay lower rates with higher transaction volumes, and an unfavorable impact from hedging. Management also said this in the recent earnings call. As you get larger, it's harder to grow, but it's also a little bit different for us because of the impact of eBay, where eBay has been growing much slower than the rest of our business and has been a meaningful part of our business for several years. And so as we rely less on them going forward, we're seeing all the other elements of our business, the merchant services specifically, that are growing at a much faster rate. If you look at PayPal's recent Q3 earnings here, you can see PayPal's total payment volume growth rate has slowed in the recent quarter. Also, if you look at PayPal's recent total revenue growth rate has also slowed down in the recent quarter. The main reason is that eBay is no longer using PayPal to process all of eBay merchants' transactions. This is why PayPal stock dropped a lot this year. Here's the interesting part. According to this article here, eBay has forced all sellers to use its own managed payment service instead of using PayPal. After PayPal was spun off from eBay in 2015, eBay and PayPal reached a 5-year agreement to give eBay enough time to develop its own managed payment solution. Now the 5-year agreement has already expired. eBay has already forced all its sellers to use its own managed payment service instead of using PayPal. This means we can expect PayPal to receive much smaller payment transactions from eBay going forward. But this is only half the story. The important part is this. I believe this shows PayPal's actual growth excluding eBay going forward. If you look at the recent Q3 earnings release here, you can see eBay accounting for 3% of PayPal's total payment volume compared with 7% in the same quarter of the previous year. eBay accounted for 4% of PayPal's total revenue compared with 13% in the same quarter of the previous year. Also, if you look at this here, you can see PayPal's total payment volumes growth was much higher excluding eBay's merchant services payment volume, and PayPal's revenue growth was also higher excluding eBay merchant services revenue. This means that PayPal's growth is no longer relying on eBay going forward. In my opinion, this is a good sign because eBay is already forcing all its sellers to use its managed payment service instead of using PayPal. I believe PayPal's biggest long-term growth catalyst is its growing user base and its increasing total payment volume. The number of active users and the total payment volume are the two most important metrics for PayPal because they drive PayPal's revenue growth every quarter. PayPal earns 90% of total revenues from transaction fees that are driven by total payment volume growth every quarter. As of now, PayPal has over 460 million active users. Management is expecting that they will have 430 million plus active users by the end of the year. As long as PayPal's active users and total payment volume are continually growing every quarter, we can expect PayPal to have high revenue and high operating income going forward. Personally, I believe PayPal's biggest competitive advantage is that it has over 460 million users. Most online merchants already accept PayPal as one of the primary payment options. If you shop online a lot, you will notice that the 3 most popular payment options on most websites are Visa, MasterCard, and PayPal. PayPal is the most popular platform to send and receive money online. PayPal is already the largest electronic payment processing company in the world, with a market share of 50%. All these things combined create what we call the network effect. I believe this is PayPal's biggest competitive advantage and economic moat. In the short term to probably until the end of 2022, PayPal's revenue growth will still be impacted by decreasing transactions and merchant services revenue from eBay. But in the long run, I believe PayPal's user base and total payment volume will continue to grow for many years because of the network effect I mentioned earlier. PayPal's management said in the recent earnings call, it tells us PayPal's other long-term growth catalysts and opportunities. We actually have a larger number of new growth vectors too that are actually kind of already launched, like buy now, pay later. We have launched short-term installments. We're launching long-term installments next year. Venmo monetization. I think the Amazon deal shows that we're just at the beginning of that journey. Other things like our BCDC, blockchain, crypto and digital currencies, business unit, crypto buy, sell, hold. All of these things are actually relatively early in their growth cycle. PayPal also has other growth catalysts and opportunities that are still in the early stage. These growth catalysts and opportunities include PayPal's buy now, pay later service that allows customers to buy things with 4 interest-free installments. PayPal is planning to release longer installments later on. I believe PayPal's buy now, pay later service will increase PayPal's total payment volume and its revenue because buy now, pay later is becoming very popular for many customers who want to pay using interest-free installments instead. Here's the most important catalyst. PayPal announced that Amazon will allow customers to pay with Venmo in the US starting in 2022. Personally, I believe this is the biggest growth opportunity for PayPal going forward because it will increase PayPal's total payment volume. Management said this, you can expect that the Amazon deal will drive more TPV growth than revenue growth with any large merchant like that. Even we experience this ourselves, there is more pricing power the larger that you are, and so it's reasonable to assume that in this deal as well. In fact, we shouldn't even assume that there's a full run rate benefit of that next year because there's going to take some time to actually work through the details of what the experience is on the Amazon website. And so it'll be sometime next year when our customers begin to see this as an option. But really excited about what this does for our business. And look, as I said yesterday, this is the other side of the eBay coin. This is not something that we could have done if we were still tethered to eBay in the way that we were before. And I know that investors have been patiently waiting for something like this. Again, if we consider PayPal's network effect, PayPal's increasing user base and the upcoming Amazon partnership, I believe PayPal's total payment volume and revenue will continue to grow for many years, even if PayPal's revenue growth is impacted by eBay in the short term. Let's talk about PayPal's biggest risk you should know about. I believe PayPal's biggest risk is that its revenue growth is much lower in the short term because PayPal is no longer receiving as much transactions from eBay as before. eBay is requiring all sellers to use eBay's managed payment solution instead of using PayPal. This is why PayPal's revenue growth has slowed down a lot in the recent quarter. Management had to lower PayPal's full-year revenue guidance. This is from the recent Q3 earnings release. eBay Marketplace's volume declined 45% on a spot basis, representing 3% of total payment volume, compared to 7% in the prior year period. In the same period, eBay Marketplaces was less than 4% of PayPal's total revenue compared with 13% in Q3 2020. This shows that PayPal will be getting much less payment transactions and revenues from eBay going forward. To be fair, if you look at this here, you can see PayPal's total payment volume growth is no longer relying on eBay. PayPal's revenue growth is also no longer relying on eBay. I believe PayPal's second risk is obviously increasing competition. In the payment processing market, PayPal's biggest competitors include Stripe, Shopify Pay, Amazon Pay, Afterpay, and Square Payments. Braintree is not included because it is owned by PayPal. PayPal has the largest market share of 49.32% at the time of making this video. In my opinion, I believe it will be very hard for competitors to compete with PayPal in payment processing because PayPal already has the most users, over 460 million active users worldwide, and because most online merchants already accept PayPal as one of the most popular payment options online. This is the network effect I talked about earlier. Visa and MasterCard are the two biggest competitors that I believe can compete with PayPal because customers can choose to buy things online using Visa and MasterCard instead of using PayPal. However, if you use PayPal's digital wallet to buy things online using Visa or MasterCard, PayPal can still earn acquired fees from it. Let's talk about PayPal stock valuation. Before investing in any stocks, I always believe it's important to estimate the company's fair interest value first, so we know whether the stock is currently undervalued, fairly valued, or overvalued. I always use this intrinsic value calculator here to estimate a company's fair interest value. If you want this intrinsic value calculator, you can download it in my Patreon blog in the video description. Here are the key assumptions. First, I define PayPal's intrinsic value as its future cash flows discounted to the present day. The discount rate is 8%. This is slightly higher than the 7.1% cost of equity calculated by Finbox.com. If you want to be more conservative, you can always use a higher discount rate here. PayPal's most recent 12 months of free cash flow is $5 billion. Based on the long-term growth catalyst I talked about earlier, I believe PayPal's free cash flow will grow at a compound annual growth rate CAGR between 15% and 25% over the next 5 years. This cash flow CAGR is very subjective. You can always use a lower cash flow CAGR here if you want to be more conservative. To calculate the terminal value at the end of year 5, we're using both the perpetual growth model and the exit multiple model here. Then we take the average of both models to calculate the terminal value. Let's go over these 3 case scenarios: the worst case, the normal case, and the best case scenarios. Under the worst case scenario, we're using a compound annual growth rate CAGR of 15%. If we forecast PayPal's free cash flow to the next 5 years and discount the free cash flows to the present day, PayPal's intrinsic value should be around $210 billion for the entire company, or $178 per share. I'm giving this scenario a 25% probability here. Under the normal case scenario, we're using a compound annual growth rate CAGR of 20%. If we forecast PayPal's free cash flow to the next 5 years and discount the free cash flow to the present day, PayPal's intrinsic value should be around $256 billion for the entire company, or $218 per share. I'm giving this scenario a 50% probability here. Under the best case scenario, we're using compound annual growth rate CAGR of 25%. If we forecast PayPal's free cash flow to the next 5 years and discount the free cash flow to the present day, PayPal's intrinsic value should be around $312 billion for the entire company, or $265 per share. I'm giving this scenario a 25% probability here. If we add all these numbers here, PayPal's fair intrinsic value should be around $220 per share at the time of making this video. This means PayPal, in my opinion, is undervalued by around 5.3% at the time of making this video. So will I buy PayPal stock? Yes, I will buy more PayPal shares going forward if PayPal is undervalued by a lot, because I like that PayPal is already the dominant leader in the online payment processing market. I like PayPal's network effect I talked about earlier. I already have PayPal shares in my portfolio. It's already a multi-bagger stock. I did buy more PayPal shares recently after I saw PayPal stock dropping as much as 12% in one day after it released its Q3 earnings. Based on my estimate, I believe PayPal's fair interest value should be around $220 per share at the time of making this video. Now, all these estimates are only my opinions and my analysis based on my research. They are not financial advice. Make sure you always do your research and do your extra due diligence first before investing in anything. If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and investing videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a premium member. Our goal is to create the best intelligent investor community that will help all our members grow their stock portfolios to over 7 figures over time. With your support, we will be able to stay independent, hire other outstanding analysts to cover different stocks, and create many excellent stock analysis and investing videos every week that will help you become a great investor. The link is in the video description. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.